Ladies and gentlemen, let me start with a simple question. Were you excited when silver hit 590 or were you scared? Because most people celebrated. They saw 59 and said, finally, it's happening. But the people who understand the system, the people who know how money really works, they didn't celebrate. They leaned forward. They watched the reactions. They watched who panicked. They watched what broke first, because the price of silver doesn't tell you the truth. The reaction to the price tells you everything. And when silver reached 59 burrs, the system flinched. Banks tightened liquidity. Hedge funds scrambled to cover short positions. Paper contracts started shaking like a house of cards. And suddenly all the experts who said silver was boring started using words like volatility, instability, temporary spike. No, this wasn't temporary. This was the mask slipping. Most people look at the price of silver and think that's where the story begins. They sit in front of their phones, refreshing charts, celebrating when the price goes up and panicking when it goes down. But the price is never the real story. The reaction to the price is what exposes the truth. The reaction is where the masks fall off, where the lies get uncomfortable, and where the real players make their moves. When silver touched 59, the average person focused on the number. They said, wow, 59, amazing. But the people who understand money, the people who know how the system works behind the curtain, didn't care about the number. They care about how fast the number moved, who reacted first, and who reacted the most violently, because that's what tells you what's breaking. But whenever silver makes a sharp move, banks don't smile. They tighten, they restrict, they freeze, they change margins, they adjust contract rules. Why? Because they're not scared of silver rising. They're scared of what rising silver reveals. Rising silver exposes weakness. It exposes that the paper system is leveraged far beyond what the public realizes. It exposes that promises are being traded instead of real assets. It exposes that physical supply is limited while paper supply is infinite. So the moment silver touched 59, the true story began. Paper holders started sweating. Funds began scrambling. Shorts started looking for an exit door that had suddenly gotten very, very small. And the funny thing is, most people didn't even notice. They were too busy celebrating the number. But the smart money was watching the panic. And panic is always more informative than price. The reaction showed who was overleveraged, who was unprepared, and who was pretending to be in control. You don't see fear on the chart. You see it in the decisions institutions make when a simple metal starts waking up after decades of suppression. You see it in sudden warnings from analysts who just days before called silver stable and predictable. The same people who dismissed it now called it dangerous, overheated, and unstable. Whenever someone in power tells you something is dangerous, it usually means they're losing control of it. This is why the price is irrelevant. The system is built on reactions. It's built on psychology. When the dollar weakens, the reaction tells you more than CPI reports. When interest rates rise, the reaction tells you more than economic speeches. And when silver moves, really moves, the reaction tells you everything you need to know about how fragile the system actually is. The average person sees 59 and thinks opportunity. The wealthy see 59 and think signal. Signals are more valuable than numbers. A number can fool you. A signal cannot. A signal exposes who is confident and who is terrified. A signal separates the educated from the emotional. A signal tells you which direction the system is leaning long before the crowd figures it out. Silver hitting 59 didn't cause chaos. It revealed chaos. It peeled back the surface and showed what's been building underneath for years: debt manipulation, hidden shortages, and a financial system held together by duct tape and hope. The reaction told you that institutions were not prepared. They never are. They react to protect themselves, not the public. And when they react aggressively, the move wasn't accidental, it was structural. And that's the real lesson. Don't watch the price, watch the behavior. Prices move every day, but behavior only changes when something cracks. The day silver hit 59, something cracked. You could see it in the fear, the scrambling, the rushed adjustments. And once fear enters the system, it doesn't leave. It just waits for the next move. And when that next move comes, the people who watch the reactions, not the price, will be the ones who understand what's coming next. Most people don't understand the difference between paper markets and real metal, and that's exactly why they get hurt. The world of paper markets is built on promises, layers and layers of contracts, derivatives, futures, and claims that only exist as long as no one asks for delivery. Real metal, on the other hand, is simple. You either have it or you don't. No excuses, no delays, no fine print. When you buy silver on paper, you're not buying silver. You're buying someone's promise that silver exists somewhere. You're buying a contract that says, trust me, the metal is out there. But trust is the most expensive asset in the world, and it becomes worthless the moment the system is stressed. Paper silver works perfectly until too many people ask for the real thing at the same time. That's when the truth shows up. That's when the difference between owning value and renting a fantasy becomes painfully clear. The entire paper market is designed to make you feel like you're participating in the real thing. They give you charts, tickers, trades, liquidity. They make it fast, easy, and convenient. But convenience is the bait. The trap is what happens when the music stops. Because paper markets confidence depend on the assumptions that almost no one will ever request real metal. The moment that assumption changes, the game changes. When silver prices start rising sharply, paper traders panic first. They know their positions aren't backed by physical supply. They know the leverage is insane. They know that if even 10% of holders demanded delivery, the entire system would collapse. So when silver makes a sudden move, the reaction isn't logical. It's desperate. Margin calls, rule changes, contract adjustments, temporary restrictions. These aren't strategies. These are survival instincts. Real metal doesn't require any of that. Real metal doesn't crash because a computer makes the wrong calculation. Real metal doesn't get liquidated overnight because a broker changed requirements. Real metal doesn't freeze because a bank had too many losing positions. Real metal sits quietly in your hand, unaffected by the chaos around it. That's the power of tangible assets. They exist independently of the financial system. And that independence terrifies the people who run the financial system. The reason the paper market exists is simple. If everyone tried to buy real metal, the price wouldn't be 25 or 59 or even 100. It would be multiples of that. The only way to suppress the true value of silver is to create an ocean of paper claims that dilute the market. 1 ounce of physical silver should equal 1 ounce. But in the paper world, 1 can represent 100, 200, even 500 claims, which means most of what people call silver isn't silver at all. It's a digital promise floating in a system that can evaporate the moment things get uncomfortable. The wealthy understand this. They don't trust promises. They don't trust systems built on debt and leverage. They don't trust institutions that panic every time real money wakes up. They know the difference between owning something and being told you own something. They know that in times of crisis, only the real thing matters. And that's why real metal has survived every empire, every crash, every war, every collapse, because it doesn't depend on confidence. It doesn't depend on politics. It doesn't depend on a bank's balance sheet. It doesn't depend on anyone keeping their word. Real metal is value. Paper silver is confidence. And confidence disappears long before value does. So the question is simple. When the next shock hits the system, when the next wave of fear floods the markets, when the next inflation surge exposes more weaknesses, what would you rather hold, a digital promise written by someone who is already over leveraged, or real metal that has outlived every financial experiment in history? Because when the system gets tested, paper evaporates, metal doesn't. Most people chase price because they don't understand value. They get emotional when something starts moving. They hear the headlines, they feel the hype, and suddenly they're running toward whatever's going up. That's what amateurs do. Smart money doesn't behave like that. Smart money doesn't care about today's price. Smart money doesn't panic when something dips or explode with excitement when something surges. Smart money looks at fundamentals, pattern cycles, and most importantly, value. When silver hit 59, most people screamed, "Is it too late?" That's the mindset of someone who waits for permission. Smart money had already positioned itself long before the move. They weren't surprised by 59. They weren't shocked. They weren't caught off guard because they were never chasing the price. They were accumulating the asset while it was boring, ignored, and dismissed by the mainstream. That's what separates the informed from the reactive. The reactive crowd waits for excitement to tell them what to do. The informed crowd waits for undervaluation. Price is noise, value is signal, and smart money is always tuned to the signal. You can learn a lot by watching how wealth behaves during volatile moments. When silver spikes, the average person thinks, maybe I should buy now, while the wealthy think, this confirms what I already knew. Their actions aren't driven by emotion. They're driven by preparation. They add to their positions when the world is asleep, not when it's waking up. They buy what is unloved, not what is trending. They accumulate when the price is quiet, not when it's shouting. And the reason is simple. Wealth is built through ownership, not reaction. Don't build wealth by waiting for the price to spike. You build wealth by acquiring assets when they're undervalued and holding them through the storm. The world teaches people to chase. The system teaches them to follow. Smart money does the opposite. It takes positions when no one is watching and expands those positions. When fear dominates the news cycle, smart money understands cycles. They know silver at 23, 28, or 35 wasn't a bargain because of the price. It was a bargain because the fundamentals were screaming louder than the chart. Debt rising, currency weakening, supply tightening, industrial demand growing. But the price I stayed low because the mainstream wasn't paying attention. Smart money loves when people don't pay attention. That's where opportunity lies. Most people believe wealth is created by timing the market. Smart money knows wealth is created by as time ends the market. If you're holding the right asset, silver isn't attractive to the average investor because it doesn't move like a meme stock. It doesn't produce dopamine. It doesn't satisfy the craving for instant gratification. But smart money doesn't need entertainment. It needs protection. It needs a hedge. It needs something real. Value is quiet. Price is loud. And loud things distract weak investors. Quiet things reward patient ones. So while most people panic when silver drops or celebrate when it rises, smart money ignores all that. They understand that noise is temporary, but value compounds. The wealthy don't care if silver is 22 this week or 59 next month. They care about what the world will look like in 5 years. They care about the integrity of currencies. They care about debt burdens. They care about supply shortages. They look at the long game, not the immediate thrill. Accumulation is not an emotional process. It's strategic, it's intentional, it's disciplined, and it's boring. That's why most people avoid it. But the boring moments are where wealth is built. The real money isn't made during the spike. It's made long before it when almost everyone else is asleep at the wheel. That's why smart money wins. They aren't chasing price. They're accumulating value. They're positioning themselves for the future while everyone else is clinging to the present. Price moves, value stays, and the people who understand that difference never fear volatility. They use it the moment silver starts waking up. The most uncomfortable people in the world aren't investors. They're governments, banks, and institutions. Because silver rising isn't just a price movement, it's a spotlight. And that spotlight lands directly on the parts of the financial system that were never meant to be exposed. Silver doesn't just rise, it reveals. And what it reveals is exactly what powerful institutions don't want the public to see. You have to understand something. Governments and banks thrive when people trust paper. They thrive when citizens believe that currency is stable, that financial systems are secure, and that everything is under control. But silver is the enemy of that illusion because silver doesn't lie. Silver doesn't get printed. Silver doesn't obey policies, speeches, or manipulation forever. When silver wakes up and starts telling the truth about inflation, the truth about currency debasement, and the truth about financial fragility. When silver makes a strong move, governments get nervous because it exposes their weakness. Rising silver is a direct statement that the currency is losing purchasing power. Rising silver is a mirror showing the public what inflation reports are trying to hide. If silver goes up fast, it signals the public that something is wrong, very wrong with the money they're using every day. And nothing scares policymakers more than people questioning the money itself. Banks hate when silver wakes up for an even simpler reason. It exposes the leverage game. Banks operate on a fractional system. They lend more than they have. They promise more than they can deliver. They create more financial products than there is real substance backing them. That's fine as long as no one asks for the real thing. But silver is real. It requires physical delivery. It exposes whether the bank actually has what it claims to have. The paper silver market is the perfect example. For every 1 ounce of real metal, there can be hundreds of pieces of paper claiming ownership. As long as no one asks for physical delivery, the illusions stay alive. But when silver starts waking up, people start demanding real metal. And the moment they do, the system begins shaking because the paper world cannot survive a physical audit. Banks know this. Institutions know this. That's why silver rising causes sudden rule changes, sudden liquidity freezes, and sudden market protections. They call it stabilization. In reality, it's self-preservation. Institutions hate rising silver because it reduces their control. Power in the financial world comes from controlling the narrative. When silver is quiet, the narrative is easy to maintain. When silver is loud, the narrative cracks. You can't convince people the economy is strong when a metal that has been undervalued for decades suddenly erupts. You can't convince people inflation is stable when silver is acting like a fire alarm. You can't convince people everything is under control. When one of the oldest forms of money is signaling distress, this is why you see predictable behavior whenever silver wakes up. You see analysts suddenly warning about volatility. You see banks adjusting margin requirements. You see institutions talking about speculative excess. You see sudden articles explaining why silver isn't really important, why the spike is temporary, why people should calm down. They don't do this because silver is dangerous. They do this because the truth silver reveals is dangerous to them. Silver waking up threatens the comfort of institutions that rely on people staying asleep. It threatens the illusion that paper promises are good enough. It threatens the narrative that currencies are stable and policies are effective. It threatens the belief that the system is stronger than it really is. But the real danger for them is what happens next. Once silver wakes up, people's minds wake up too. And once people start asking questions about real money, real value, and real assets, they stop depending on the system. They start protecting themselves instead of trusting institutions to protect them. That's the moment governments get worried. That's the moment banks panic. That's the moment institutions scramble to regain control. Because a public that understands real money is the one thing they fear most. Silver waking up is not a problem for you. It's freedom, but for them, it's a threat. And every time it rises, you can see exactly who's afraid of the truth. Most people wait for the system to warn them before they take action. They wait for the government to announce a crisis, for the banks to admit a problem, or for the news to finally say it's time to prepare. But by the time those warnings arrive, The damage is already done. The system doesn't protect you. The system protects itself. And when the pressure builds, when the cracks widen, when the truth gets too loud to hide, the system will rearrange your future long before you even realize what happened. That's why the real message isn't about silver hitting 59. It isn't about market moves, charts, or headlines. The real message is simple ARS. Protect yourself before the system decides for you, because that's what happens when people wait. They get rearranged. Their savings get rearranged. Their purchasing power gets rearranged, their retirement gets rearranged, their future gets rewritten without them having a say. Look at inflation. Did the system warn you early? No. They told you it was transitory. They told you it was under control. They told you to relax. Meanwhile, your money quietly lost value every single day. Prices rose, wages didn't, and the cost of living squeezed millions of people who trusted the system to tell the truth. That's what happens when you wait. You get rearranged. Look at debt. The world is drowning in more debt than at any time in history. Governments borrow money like there's no tomorrow and then raise taxes, print currency, and devalue savings to pay for their mistakes. Do they warn you before these decisions? No. They simply change the rules. They pass new laws. They adjust rates. They shift the burden onto ordinary people quietly, efficiently, without asking for permission. That's what the system does. It protects itself first. But when you understand this, you start thinking differently. You stop waiting for permission. You stop assuming someone else will take care of your financial security. You realize the system doesn't collapse overnight. It aerodests slowly, silently, while the public stays distracted. And then one day, everything changes at once. That's why the move in silver wasn't a celebration. It was a warning shot. When real assets start signaling distress, you should pay attention. Not because you need to chase the price, but because value is trying to speak to you. Silver rising is not the danger. Silver rising is the symptom. The danger is the system that forced it to rise in the first place. The people who understand this don't panic. They prepare. They diversify. They protect themselves before the storm hits. They move before the crowd. They position themselves for the future instead of letting the future position them. You have to decide which side you're on. Are you going to be the person who waits for someone else to tell you what's happening? Or are you going to be the person who reads the signals and takes action? Because the system isn't going to slow down for you. It isn't going to ask for your approval. It isn't going to give you a warning label when things get tough. It will rearrange everything around you without hesitation. The world is entering a phase where only people who take responsibility for their own financial decisions will thrive. Everyone else will be carried by the current, and currents don't care who they drag under. The message is simple. Protect yourself now, own real assets, hold real value, build your defenses before the next shock hits, because when the system adjusts itself, it won't be gentle. You can either protect your future today or watch someone else rearrange it tomorrow. So here's the real message. Don't focus on 59. That was just a spark. Focus on Be Spark Revealed. A monetary system stretched to its limits, a paper market running out of time, a world waking up to real value again. The people who win in times like this aren't the people who wait for permission, aren't the people who wait for news, aren't the people who wait for guarantees. They're the people who prepare before the crowd wakes up. Silver didn't hit 59 to impress you. It hit 59 to warn you. The question now is simple. Are you preparing or are you waiting? Because the next time silver makes a move, it won't be a warning. It'll be a lesson. And lessons in this economy are getting very expensive.